Hi, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and I just go through sort of my macro outlook, and then I do some analysis on products that I trade. So I hope you enjoy it, and I hope it helps you with your trading. Okay, so let's have a quick look. Last week we saw the S&P make its 31st new high of this year. Of course, it was driven by Nvidia because it became the highest valued company ahead of Apple and Microsoft for a very brief period of time, that is. And come Friday, their shares dropped sharply, and whether that was caused by the triple witching, I'm not sure. Hopefully we'll find out this week. But it had $220 billion wiped off of their market cap on Friday. Just goes to show how volatile that stock is. Now, US retail sales last week were weaker than expected, and inflation is getting closer to that Fed's target rate of 2%. It's just not quite hitting it, but it's close. And of course, unemployment is creeping up. If you look at the jobs available to unemployed, at its peak it was over 2 to 1, so 2 jobs for every person unemployed. That's now down to about 1.2 to 1. And for me, I think it could even touch 1 to 1. I've been saying that towards the end of last year. I said that unemployment was going to creep up. Now, I think with the unemployment, as I've mentioned a few times, I think really, you're seeing less full-time jobs available, and you're seeing more part-time jobs available and taken up, of course. And part of that is because there's some guys that are having to run 2 or 3 jobs just to pay all the bills, where inflation has risen so much. And for those fortunate to have some savings in America, they are dipping into that, or of course they're using that buy now, pay later. And I think even that's just getting a little bit tighter, not so easy to access. And what can I say? These high earners and actually retirees is a sort of something to be aware of. 20% of the economy is that consumer demand is coming from retirees, and of course they've got the cash to spend. But they've also got savings, and they're getting a good return on their savings at the moment in comparison to what they have been in previous years. But those sort of low to middle income workers, they're just having to live month to month, and of course that's more challenging. Now, for me, sort of the Fed has to decide if waiting for that 2% inflation is more important than cutting rates to prevent any serious downturn. I don't see the US economy as strong as the data is sort of just demonstrating. I really don't. And when you look at it, they were slow to hike rates. Will they be too slow to cut? Because if they do wait, then I think it's going to be a similar case. If they have to wait till September or around September before they cut rates, I think they may cut them more aggressively, and perhaps even start with a 50 basis point cut rather than a 25. So that's something to bear in mind. And then by the end of the year, maybe even a second one of those to sort of shave a 1% off of rates. Now, of course, that's going to benefit some and be sort of less happy for others. I mean, anyone that's got cash, they're obviously happy to see these 5% rates. Just think of all the big Titan companies, all these Magnificent Seven and all that. They're so loaded up with cash. They're basically making 5%, not even producing anything. Now the yen hits, I think it was a 35-year low against the dollar, and traders are sort of okay. I think Japan's got to put their rates up a little bit. They've got higher inflation at the moment. I think it's about 2.5% now, but they don't seem to be in any rush. And of course that again is sort of causing weakness in the yen. you know, there's been rumours they've been in twice so far since the yen started to dip. They may have to come in again to stop that falling further. And of course, you know, the other side of that is the Fed just aren't cutting at the moment, which again is steadied the dollar up over the last week. If we move on and look at German housing market, that remains weak. That's dropped over 1% quarter on quarter. And then the EU PMI slowed. You know, it's just showing less growth than expected, and manufacturing PMIs were disappointing for sure. Now, we talk about tariffs. I mean, you know, we've got to think about them again if Trump gets back into power in November. And that's going to be interesting, but I'll talk about that in a minute. But, you know, these tariffs are sort of picking up and they're travelling as well. So now these sort of tariff wars, if you like, are building this time against Chinese EVs. Now, Canada's joined the US and the EU in adding tariffs against those imports. Moving on to sort of Russia. So there was 4 Russian refineries under attack from Ukraine recently by drones. It's one of the biggest attacks of the war so far. And then Israel, Hamas, you know, you don't hear so much about that at the moment, but of course that war's carrying on 260 days in now, and Israel continuing their attack in Rafah, Gaza City, and of course, you know, that's causing pressure and problems in the Red Sea. The US destroyed 3 Houthi vessels in the last week. You know, because ships are still having to avoid that area because they fear the attacks from Houthi. And, you know, that's adding sort of about 3 weeks to the journey. It's delaying supplies, it's increasing expenses of you know, 80% of, you know, goods are transported by sea. Now, UK and French general elections are close, and, you know, did these leaders call it right, calling these snap elections? Because when you look at it, they seem to be as though they're about to backfire spectacularly. You know, I expect the Bank of England's going to cut rates in August, but they won't do that yet because they're going to want to see the outcome of the UK election. And then, of course, by the time they get to make that decision, they're going to have seen more inflation and wages data as well. Because not just inflation, but the Bank of England does put a lot of focus on wages as well. Now, this week we've got Australian inflation data coming out, and that's obviously going to be interesting after the RBA was considering hiking rates. And yes, I mean hiking, not cutting, as inflation remains too high for them. And this week we're going to have a little bit of probably fun, because it's going to be Biden versus Trump debate, and I'm really looking forward to that. Then other data, we've got UK GDP, Canadian CPI, German IFO, retail sales, employment data. In Japan we've got retail sales and employment data as well. Now, there's a few speakers this week, central bank speakers from the Fed, Bank of Canada, ECB, probably a couple of others as well. You know, I'm only picking out the main stuff, or certainly the main stuff that I look at anyway. And then in the US, we've got consumer confidence, housing data, GDP, durable goods, of course, that magical PCE's coming out Friday, big focus on that. You know, that's the key metric for the Fed when they're looking at inflation. And then we've got Michigan consumer sentiment. And also we're going to see the Fed stress test for the banking sector results coming out. So just keep an eye on that, because that could have a bit of an impact on the markets as well. Okay, so that's it for the macro. I hope you found that interesting, and see you again next week. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. You know, this will help you to discover if trading could be your next career, or even just a second income. Otherwise, maybe you're already trading, but there's a few gaps that you'd like to fill in, and I can help you with that, because that will accelerate your trading and your performance. And then there's a 1 week intensive course, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market, and also on any asset class. I trade them all. And as I say, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And this is to help you reach that next level time and again. And I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as I mentioned earlier about the trading challenges, if you're looking for a funded trading account, then you can contact me for details just about the ones that I use, or you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice, and do that before you risk your capital. So many people come and find me after they lost money, which is sad. They should come to me before. And yeah, so listen, that's it for part 1. I hope to see you in part 2, where I'm going to do some technical analysis. Okay, so now just moving on, this is part 2 of what I do. I've already done the macro outlook, so hopefully you've listened to that. And now looking at sort of the charts of some of the products that I trade. Remember, I trade the futures, and these charts are just looking at day charts. Some are just support, resistance, trend lines. Others I've added fibs on as well. So I hope you find this informative and it helps you this week with your trading. So before I do that, just the legend, so you know exactly what's there. So the black numbers are going to be support and resistance levels based on trend lines. Pink numbers are going to be breakout levels, and claret numbers, they're just going to be horizontal levels where I've identified support or resistance, generally based on double or triple tops or bottoms. Okay, so Dow Jones, okay, so I've got resistance at 39,345, I've got support at 38,444, and I've got the fibs on there as well, so it closed pretty much on the 50 level. So again, it's just going to be a matter of where it opens. Is it going to go up and test the golden ratio, or is it going to drop back to test the 382? But the reason I only do the dailies now is because these hold in for days or weeks rather than just for hours, which obviously happens with the 30-minute ones. S&P futures daily got resistance at 55.23 and support at 54.38. Nasdaq futures, I've got resistance at 21.36, support at 19.498 and support at 19.174. As you can see from the S&P and the Nasdaq, sort of both made record highs again Thursday last week. Okay, now the pound against the dollar. So the dollar strengthened up a little bit last week. You know, again, these expectations that rate cuts aren't coming anytime soon. Higher for longer still seems to be how we're seeing things. But now I've got resistance at 128.63 and I got support at 126.26. The euro against USD, I've got resistance at 107.92 and I've got support at 106.71. It's just about filled that gap, so that's out the way now. It's gonna, you know, this week I think it's all going to lead up till next Friday with the PCE data. Okay, so Bitcoin. So Bitcoin's just sort of dropping a little bit. You know, there's still talk of it reaching 100,000, a million and all that, and maybe one of these days it will. But at the moment it's just sort of probably mid-range, and I've got resistance at 72.945. That was a support line going through there, so I've left it there because that might just now become a little bit of a tester for resistance, which is 66.373. I got support at 61.060. And then if it does have a big fall off, then I've got sort of a breakout level on the downside at 55.215. With gold, you know, it's still ranging, big ranges. There's still good opportunities if you can get it right. So here we are seeing resistance at 23.83 and support at 23.26. On the downside, I've got a breakout at 22.69 and then the next support at 21.92. And then finally, WTI. I've got resistance at 82.74. I've got support at 78.44. There's a little bit of dollar impact in there, but of course there's a lot of geopolitical issues going on. That's testing oil at the moment on both sides. But you know, oil does tend to range. It gets into those sort of $3-4 ranges, and then it'll pop out, find itself a new range, and you can see that from the way it acts on the charts. I mean, you know, that sell-off down into the low 70s probably was overdone, and of course now where it is, you know, I'll leave that up to you to decide. Anyway, that's it. Another couple of slides to come, but that leaves me to just wish you have a great week trading. Best of luck. So, just a little heads up on my services. So I offer a daily newsletter. That includes global news, headlines, my views. That's a subscription service. I also offer one-day workshops. You know, this helps you to discover if trading could be your next career or maybe just a secondary income. But, you know, the one thing is, because I offer a variety of them, is I can also just fill in any gaps that you may have with your current trading, or, you know, whether it's macro or actual trading skills. And then I offer a 1 week intensive course. You know, that's going to make you feel confident and competent after just 1 week. And, you know, that's going to basically give you the foundations on which to build your trading career. You know, I'm going to help you find that inner trader. And that also now includes a free trading challenge. And then there's my Flexi Masterclass. That's 6 weeks of guided learning. But you can spread them out. You don't have to take them all at once. And that does help to accelerate the learning curve. and that's designed to provide you with all the knowledge and trading tools that you're going to need to navigate these markets, and any asset class, whether it's financial, commodity, digital, I'm involved in them all. And as I say, the weeks can be spread out there, and that also includes a free trading challenge. Trader mentoring, so maybe you've already got some experience but you're looking to get to that next level and you're struggling to do that. I offer mentoring by the hour, by the day, or a monthly subscription. It's entirely up to you. But I just want to help you guys to reach that next level time and again. And of course I provide lots of trader educational content, not just to individuals but also to exchanges and brokers. And if you're looking for that funded trading account, so you don't have to risk your capital, then contact me for details. I've got two good ones that I use. Okay, so finally, as usual, just ending with a disclaimer. So, if you're already involved, then you'll know this. If not, then please take serious note of this, that trading does involve the risk of loss of capital and it's not suitable for everyone. However, I do hope it is for you. And now, because there's leverage involved from many companies, just be careful because you can lose substantially more than that initial investment. The regulators are a bit more on top of that these days, but even so, just be a bit cautious. Everything that I include in these just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, you've got to consider the risks involved. And that includes your financial situation, definitely your level of experience, definitely your risk appetite, and of course, only risk capital you're prepared, but more importantly, that you can afford to lose. And if you've got any doubts whatsoever, first of all, think twice before you do it. Speak to a financial advisor. And do that before you risk your capital. I have so many people come to me because they've lost money. I'd rather they come to me and learn how to do it and not lost the money in the first place, because that's just a waste of their savings. So anyway, I hope you've enjoyed these, and I'll be doing these on a weekly basis. So I'm going to post the links in places so that you can get to them. My new website will be finished soon, but in the meantime you can reach me at the email address below on all the slides, which is chrisjtubby55@gmail.com. And all I can say is I wish you a wonderful week, best of luck with your trading, and hope to see you again next weekend. Bye for now.